Good morning, guys. JR with Secure Metals Exchange. You're going to be doing some technical analysis here on both, actually on silver. Today, Monday, July 9th, 2012, 8:59 a.m. Again, this is your silver chart. Let's see. Look at the daily chart. As of right now, silver also having a hard time getting above these lines here, these declining channels. All right. We would like to see gold and silver get out of these channels. Hopefully we can break above these channels. But as the daily chart looks, the daily chart does not look too constructive here on silver. Stochastics also pointing down. Just like gold for the last 2 months, we've really been trading in this channel here. And what we saw was a false breakdown to the downside and came right back into this channel. So again, if this channel holds up, we might find some support here around 20. We might find some support around here on the 2696 zone. But stochastics, again, stochastics do not look very productive at all. On the 4-hour chart, though, same thing, very similar to gold. We saw the Fibonacci extension. We saw this find support here at the 61% Fibonacci. And again, you're just going to run into a wall of resistance up here on 2660. So again, you have to be very careful out there in this market. Stochastics are pointing up, but again, it doesn't look too constructive around this area, around the 2760 zone, 2750 zone, okay? Long term, we're looking at silver, and what do we see? Stochastics are moving a bit higher on the weekly chart, but again, this is a weekly chart, so it can take several months for these charts to come about. As of right now, we do have to be very, very, very careful with silver, and the reason why I say that is because silver has breached this line here. Actually, I'll show it on the daily chart. It looks a little bit better. But if we're looking at these levels here, hold on. Yeah, if we look at these levels from the first low on May 26, I think. Yeah, September 26, tested the line once and tested the line again. Okay, so this is 3 times we've tested this line here in the last, really in the last 8 to 10 months. And you have to be very careful. The more you touch a line, the more of a shot you have of breaking that line. So as of right now, hopefully we'll find some support here on 2692. The stochastics definitely do not look like that's going to be the case. It actually looks like it might find some support maybe at the Bollinger Band back to 2634. As long as we do not create a new low or a lower low, I think we'll be okay for now. But in the same respects, your 20-day moving average is still moving down, and you still have to be very, very careful. A lot of support here on the top, and anytime we have your moving averages on top of us, we have to break these moving average and these trend lines before we can continue to go higher. So really, silver has a little bit more of a ways to go before we can turn positive. Gold, I think the number is around 1640. I think it'll start looking a little bit constructive. But as of right now, I'd really like to see silver break above this high around $29. Definitely make a new high at least. This is just a low, another high, lower high, another lower high. And we'd like to see these start to break. We'd like to see 2880, maybe a little bit higher than this one. If that's the case, I think we can shoot for the 100-day moving average. But as of right now, the chart for silver does not look as constructive as the one for gold, but there's a lot of fundamentals right now. There's a lot of technicals. Your ratios are roughly around 58 to 60. Anytime you have your gold to 60 ratios at around 58 to 60, meaning that you can buy 58 to 60 ounces of silver with 1 ounce of gold. So anytime we can see these ratios at these levels around the 60 zone, that might be very, very, very constructive, because usually when those ratios get that high, they start to decline. When those ratios start to decline, precious metals usually starts to go up. I think we do need some type of a catalyst. I think we're going to range trade here for the next few months until we see maybe the quantitative easing announcements. It's going to happen. It's at this point, it's inevitable. The extended operation twist didn't work last year. I don't see why $260 billion that we get ourselves into debt again. I don't see why that would work. But, Bernanke, if you ask me again, he's throwing rocks and seeing if he can break a window. But as of right now, it doesn't seem like that's the case. It seems like anything that they're pumping into the system is just going to decay the dollar further, and we'll see these metals rally again. Now, as of right now, we don't have the divergence just yet on silver, on the silver monthly. So again, there is a good opportunity for us to go down to 23.15. If gold goes down to 1,500 and silver is currently at these levels, there is a good chance that we'll see silver go down to 23. But again, as I've always said, for us to continue to see the metals fall further, we would have to see the market as a whole fall down further. Now, I also want to show you guys what silver did when the news came out on Friday. We saw silver go from 24.40, it went up to 27.45, it went up to 27.74, and from there we came back down, and again 50% Fibonacci held up, 61% Fibonacci held up. Actually, this might be the Fibonacci that held. Okay, yeah, so this looks like the right Fibonacci. It held up at around $27, and silver does have a little bit of a ways to go, but I think silver is a great investment here long term. That's my opinion, and I definitely think that in the next 2 to 3 years we'll see silver. In the next 2 to 3, maybe year to 2 years, I definitely see silver over $50, especially with a new announcement of quantitative easing. So again, that's it for gold and silver tech analysis, and we look forward to hearing from you guys soon, okay? Enjoy your day and have a great week. Bye-bye.